Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 1st of February 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using the handle @DS_Pepperstone. Okay, let's kick off as ever with a look at the overnight changes and price moves to be aware of. One or two points of interest here. First of all, a sharp reversal in fortune for the Australian dollar against the US dollar, the Aussie falling by around 0.46%, but bear in mind of course that that's part of a wider trend, and in fact on a monthly basis the Australian dollar is still looking very strong. What I suspect we're seeing here is a bit of book squaring and profit taking ahead of the weekend, and of course ahead of key US unemployment data coming out later. They will look at some of the reasons that also would have affected traders thinking around the Aussie dollar a bit later on in the video. In terms of other main movers, the US dollar took money off of the Canadian dollar and the Mexican peso, up by around 0.23% against the Canadian dollar and adding 0.16% against its Mexican neighbour. Dollar index largely unchanged on the session, trading 95.65, very small movement to the upside, and the dollar also pushed back nicely against the South African rand, taking 0.39% off of the rand, although the rand has been in the ascendancy over the last week and month, as you can see here. Okay then, what's on the calendar? Events that may move the markets today. It's a pretty important calendar, pretty compact, but as I say, filled with data. We've already had the Caixin manufacturing PMI data out of China for the month of January. Remember, we looked at the PMI, official PMI data yesterday. It's another disappointing number, and again we'll look at that in a bit more detail momentarily. To come at 08:30 we shall have Swiss retail sales for the month of December, and that'll be followed at 8:55 by the first of our European PMI data today, the market manufacturing PMI out of Germany for January. 5 minutes later we shall have the PMI manufacturing data for the whole of the Eurozone for the month of January, and that'll be followed at 9:30 by the same data out of the UK. Then it's back into mainland Europe at 10 AM for a preliminary read on CPI across the Eurozone for the month of January, and then we pause for the main event of the day at 13:30, crossing over the Atlantic to the US for the January non-farm payrolls data, the unemployment situation report for January. Market expectations for the headline non-farm payrolls number 165,000 versus that blowout number of last month of 312,000. My own intuition is that we could see a small beat to 10 or 20,000 jobs perhaps above this 165,000 number. I'll be looking for any clues as to how much of these or how many of these December jobs were actually seasonal and temporary, and wonder if the data will shed any light on that. Perhaps we might see a downward revision to that December number. There's also of course the matter of the unemployment rate. It's been at 3.9% for the last 2 months, so watch carefully for changes there. An hour later, after we've had a chance to digest the unemployment situation data, we shall have market manufacturing PMI out of Canada at 14:30 GMT, and that'll be followed at 14:45 by the similar data from the US for the month of January. The Michigan Consumer Sentiment Index for January is released at 1500, and we'll also have at that time perhaps the more important PMI number as far as the US is concerned, the ISM Manufacturing PMI data for January. So some pretty important data from across Europe and the United States and North America today. Plenty to keep traders active and occupied. Okay then, breaking news and comment that's caught my eye overnight. First of all, China's Jan Caixin manufacturing PMI has fallen to its lowest level for 3 years at 48.3, compared to a forecast of 49.5 and a prior read of 49.7. There were declines in new orders, outputs and employment, although interestingly the export component of the data rose for the first time in 10 months. So there's some encouragement, but it's that sharp drop and the level of deviation between these two prior numbers that spooked the market, and hence some of that profit taking, I think, in currencies like the Australian dollar versus the US dollar. Meanwhile, the US could withdraw from a nuclear arms pact today following Russian non-compliance with the Intermediate Range Nuclear Forces Treaty that was signed way back in 1987. Not too much of a surprise that this will happen, as efforts to renegotiate with the Russians have fallen on deaf ears. But it serves as sort of symbolic in the way it represents US-Russian relations and how they could easily deteriorate. Meanwhile, Greece has hiked minimum wages in the country by 11% to €650 per month, and this is the first pay rise in the country for 10 years. So things are still very much a struggle for many people in Greece, despite the removal of the country from the EU bailout measures. Right then, food for thought and something to take away with you into the trading day and beyond. And why not think about this? On a day that we're having key US employment and unemployment data, I thought it'd be quite interesting to take a look at some of the trends in the UK market. And what we're starting to see, we're seeing continuing are signs of growth in demand within the UK labour market. First chart here, workers are starting to regain some bargaining power. The chart here shows nominal and real wages over the last 17-18 years. But as you can see, real wages, i.e. wage growth adjusted for inflation, actually starting to pick up now after lagging the headline wage growth for some time. So it's suggesting that UK workers have got a good deal more bargaining power than perhaps they've had for some time. And perhaps even more encouragingly still, employment growth is now driven by full-time work, and this is the pink line here, steadily rising the number of full-time vacancies being filled, and the fact that is outperforming the other metrics on this chart and leading the gain in all employment is a very impressive number indeed, and one the government can take heart from. Whether it will stay that way post-Brexit is of course another question. Right, thank you for your time today. Please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks, do contact your Pepperstone account representative, and please do take the time to read this risk warning thoroughly. Have a good day and a good weekend.